Hi, everyone. How's everyone doing? Brock, how are you? Ren, Kevin, hello. Arena, good morning. So, big stories, the dollar today. Let's take a look. I'm doing okay. So, finally taking out the 90 level here. It's one hope it's a 78.6 level, but I'd say that the odds probably this measured move from say 90 to 91.60 gives you 88 and a half. It's all euro. It's mainly euro up here, right? Okay. So with that happening, EG roared back. Not as much upside in cable. It already, kind of had a blow off move. Maybe we're going to pull back towards 140, and then I know a lot of people are talking about 143 and a half now. Some interesting action in the S&Ps. What a recovery, huh? From where we were early in the week with this 3,800 low. Actually, I just want to show you guys something that you guys know. I look at these things called off numbers. Hi, Paul, Galaxy, Didier. You guys have heard me talk about off numbers, right? No, just a little. That was my clunker of the week. All right, so the off number in S&Ps. Good morning, Hugo. So the weekly off number, if you just count back two numbers, it was 3940. Hi, DJ. Okay, 3940. And look at what the high was last night. Pretty close, right? 3710, 3760, and coming off. Mainly because of the yen. As long as the yen's going up, that's going to be somewhat negative gold. It happens. But the 3940 level is a Friday off number. So if we close underneath it, that'll be the first 2-week reversal. Last week we were down, but it didn't post a 2-week reversal. That would have been at 38.92, and we closed at 39.03. So this is going to be the first weekly signal if we close under 40 in the next day and a half. I'm thinking more like 88 and a half now, Jay. I mean, the measured move when you look at the Dixie here. Yeah. You just take it. Remember yesterday I was talking about 90-40 being key? Well, look at what happened. We went right there and got rejected. So, just this move from here, 91.60 to 90, call it 90, subtract 160, that gives you about 88.40. So that looks like where we're going. You could hope that 78.6 is going to hold, but it kept trying to hold this, and I think yesterday was a pretty big failure. One more high and everything. Well, I know people talking 24-ish in the euro, right? We should take out these highs. Okay, so that looks like that's going to happen. All right. Was interesting with the dollar making new lows. US dollar MEX continues to fight that trend. And here's a pretty interesting chart. We have a throwover right now on Canada. And only on the daily are we getting some kind of divergences. It's going to probably tie in with a top in crude, but I wouldn't be short Canada anymore down here. Okay. All right. Well, higher rates really didn't support the dollar. So, that brings up a good point. And I do this all the time. So you take a signal from the dollar and you try and extrapolate it, or you take a scenario from rates and you try and extrapolate it. And you don't know how many times I've gotten into trouble extrapolating something that I may know technically in one instrument into others. So why don't you take it from me? Okay, because I've done the other, and I believe in looking at the markets holistically and at correlations. But you know what matters when you're trading the dollar? The Dixie, only the Dixie. So just trade that instrument and what you see technically on that instrument, and don't try and extrapolate new trades. They could be tells, but you have to treat each trade as in, that's the universe that you're in, and start looking at other,
That's
stop looking at
really,
other
really some
instruments.
wise words, Dale.
Yeah,
I
because I've
mean,
done the other, Blake,
yeah, I mean, correlations are, I don't want to say they're a thing of the past, but they're more of a confirmation tool versus a trigger to
yeah,
get in the trade. And you said it pretty succinctly. Just focus on the instrument you're trading. If you're trading the dollar, okay, I'm looking at the dollar. Are there reasons why the dollar might be going up or going down based on what I'm looking at? Yes. Is that my full argument? Because you can make an argument in either direction no matter what you're trading.
right,
The
right,
very few times you can actually say I am this instrument bull or bear, and then just go full out. I have no other opposing arguments. So it's like, just focus on that one instrument you're trading. So well said. I'm gonna let you continue on. So
okay. I mean that's pretty much it, Blake. Oil still grinding higher. Really, when you think about it, even during the S&P sell-off, almost everything that came off with risk-off pressure has rebounded pretty good. But it certainly is hard for me to say it's right to be long. I'm actually short a little crude. Um, but I think this is going to be important the next 24 hours in um, the S&Ps, because if we just pull back and blow through this 40 area, there's new highs coming. And, we did reach a kind of a target down here. It was about 3,800 from this formation. But this could be a failure as well. This could end up being a failure. I think it's a little over 78.6 back up there. So that's what I'm really focused on for today. And then remember, we were talking about the yen being able to make a new high with rates, and we haven't quite done it yet, but it looks like it's probably a layup from here. So any questions before I TO it to Blake? Or I thought Grega was going to be, yes, I
yeah, he'll
said
be
88
popping
and
in
a
here
half.
very shortly.
Okay.
Yeah. So
And while we're
but
talking
hey,
about,
I might as well just say good morning. Good morning, Dale. How are you?
good morning, buddy.
Hey, just so I'm going to let everybody here know, tomorrow it's Friday. Obviously, it's at the end of the week. We have a pretty exciting webinar tomorrow, so you don't want to miss it. I'm going to talk about my experiences for the last several years of trading larger size versus being just trading retail for myself, and really the pros and cons of that. But the better interview tomorrow is going to be Stelios. Which Stelios, are you logged in there, bud?
I am here, yeah.
Of course you are.
I
So
would
Stelios
argue yours is
talk about
better,
his new
but
book,
still.
Truth and LIBOR. So I know you here. Let me just go ahead and grab this really quick so I can
Go
just
ahead. Look at
I have it
these
here.
pattern and plays. Grega's been very patient with this long euro
Oh, he has
position
been.
here,
He's been
real nice.
he's
And
been
then
very
you
patient.
you caught a nice, although there was a little bit of a I don't know, vacuum during that one period under
Yeah,
86.
I had to put it on the next morning because I was actually out of I was away from the I actually caught it,
Yeah.
but it was in Asia, and I was actually walking around a park, and it just was a big stop. So I actually put it in the following morning.
Oh, okay. You didn't have to sit through that whoosh. All right.
No,
Nothing wrong with
caught
that.
it after.
Yeah.
It was on my radar because it was my chart of the day.
Right. I remember it.
Before. Anyway,
All right, go ahead.
Grab the screen here, and you can just see that this book right here. This is Stelios's new book, Truth and LIBOR. So if you guys remember the big LIBOR scandal, you're going to hear all about it. Now, it's exciting. I know, Stelios, you're not going to give too much away, right?
Well, not too much, obviously, but I'm going to give the gist of the story so that people can understand. But yeah, it's exciting.
You gotta leave us wanting more, so we have to go buy the book, right?
Yeah.
Isn't that the whole thing? Here, so I'm actually gonna put the link in here for you guys so you can order it.
Thank you.
I mean, come on, it's $10. I mean, shipping is like more expensive than the book, I found out. But it's still way worth it, right? If you listen to Stelios here every day, why wouldn't you want to hear his story?
Yeah, and it gives you a good idea of what happens behind the scenes in the banks. And it's obviously not just LIBOR. There's all sorts of things happening, but it's a crazy world we live in. I'm just going to
do you write about your Ferrari?
I do mention it, yes.
Oh, of course you did.
Yeah.
Anyway, hey guys, make sure you get this, and Stelios, he'll be talking about it tomorrow. So, is Grega here yet?
He is here, yes.
Yes, Grega. Okay, good. Hey, I just wanted to mention that to everybody. So, without further ado, I'm going to see you guys in about an hour's time for those of you that are Forex Analytics subscribers. Now, before I pass it over to Greg, don't forget to visit our webinar sponsor. They're the ones that make sure that this webinar can go on. You can go over to our website and say Forex Analytics sponsored. This is a Pepperstone. Matter of fact, tonight I'm actually filming a video with Chris Weston, their chief strategist over there. It stinks because he's in Melbourne and I'm here in Arizona, so I got to film it at like 5 o'clock my time, which I'm already brain dead by that point, but it's early for him on Friday. So we're going to film a quick video and a little update. So, if you want to see content like that, be a Pepperstone client. So anyway, Grega, it's all yours. I'll let you go.
Yeah.
Good luck today, Blake. Hi, Grega. How are you, Wizards?
Hey, how are you, mate?
Long time. Yeah, pretty good. Great call on Euro. Some nice pattern and plays you've been putting out.
Yeah, and hopefully it's not over yet here with the booth.
Yeah.
I mean, maybe the breakout is just beginning to start. So
right, and it took a lot of patience. And people had plenty of time to follow that tip.
Nice.
And get in. So great trade.
Okay, just a second to prepare some charts here. Okay. Screen share. Okay, so you can see my screen, right?
Yep.
Yeah. Okay, so where to begin? I mean, what is really interesting about the US dollar is that it's moving dramatically, quite sharply lower, despite higher yields, right? Now, let's imagine what may happen with the US dollar if these yields are going to reverse after this dovish Fed. So I would not be surprised actually to see, based on the pattern, to see more dollar weakness. But I just think that this thing could accelerate to the downside if the yields will stop. There are trading at some very important horizontal resistance. So I would not be too bullish on yields, and just thinking that current extensions higher on commodity currencies, it can be just in the middle of some much powerful uptrend that is in place since last year. So looking here on dollar index, what is really important here is just let's not complicate too much with the wave counts. I mean, trend is clearly to the downside, right? And each pullback was quite similar within this downtrend. And once again, we failed here at the previous swing low. And more importantly, the rise was only in 3 waves. So what I really love about this current reversal pattern is that notice here, Dale, that I had labeled potential bullish head and shoulders pattern here, right?
Right.
At the bottom. And this head and shoulders pattern failed. And normally when you have bullish signal that fails, it normally turns to very good bearish, the opposite signal. Okay. And in fact, if we just update this, it's actually the bearish head and shoulders pattern, right? And it's even more significant. Why? Because you have a downtrend, right, that is in place. So that's why I think there's a greater probability that market will continue to the downside. Another thing is that you can, with the Elliott wave principle, you can very easily identify which head and shoulders pattern are good and which may fail. Now this one is good. Why? Because the rise here, let me just remove that so that this will not confuse
It's a
you.
great point, Greg. A trade formations that are with the trend. So even though there was a head and shoulders bottom, it was much better to look for a head and shoulders top because that's with the trend.
Exactly. But still, even now, imagine if this rise would be in 5 waves, right? Then still some would try to look maybe for head and shoulders pattern. Okay, but then this would be a different story because I would try to do combination of both head and shoulders pattern and the Elliott wave structure. So if this first recovery from January lows would be in 5 waves, then I would not be bearish, but some would still be looking for a bearish head and shoulders pattern. So it's a very good combination when you have both different theories actually confirming the same view. So here was only a 3-wave rise, right? And here we have a head and shoulders pattern. So in my opinion, this just, it's another indication why dollar index could retest the lows. And as I said last time on the webinar, it's very rarely that you will see, as soon as the markets open after New Year, that you will see January high to be high of the year or January low to be low of the year. Normally those levels are retested. So I'm not really surprised actually that we are just continuing lower. Ideally, we are actually going to see wave 3 of 3 here on euro dollar. If I show you this 1 hour time frame chart. Okay, so today's close price, I think, will be very important. I was looking for this setup for a while. And if we are now in the middle of this impulsive rise, then this is now going to be one of the strongest legs to the upside. Maybe euro is trying to catch what the commodity currencies are doing, but still commodity currencies, in my opinion, are the best play on the long side. Of course, there will be always pullbacks, but when I look at Aussie and Kiwi, I mean, the moves are so significant and so sharp that they may not easily slow down. Let's not forget that stocks are still in uptrend. And if we take a look here on, let's say, on the S&P 500, that's potential wedge here. I'm looking at least for a retest of these February highs. Okay, why? Because the pullback was corrective. So I'm looking for another push higher. I think that 4,000 will be very important key level here. No one knows what will happen there, but just even if I have potential diagonal pattern here or wedge, meaning that there can be limited upside, still in the near future, I'm expecting more upside here. So that's the key. You have a pullback that is corrective, looking for a new highs, and then let's just see what will happen this 4,000 figure. But this for now is just supporting that dollar could continue even lower. If we take a look on German DAX here, what I love about this one, we're broken this trend line resistance. It was retested twice here. So just another confirmation, especially after this recent bounce, that probably we are headed higher. And ideally, towards this upper side of this wedge. And then again, let's see what happens after another potential 500 pip bounce. But still, if we maybe try to slow down in the next few weeks at the upper side of the wedge, I would bring on this chart. Still suggest that January, February could be reversal months, and now we are in February. Of course, there's not always the same. It could be the start of March, for example, but just keep in mind that we have seen a very nice run here, and there can be just a new pause here in the next few months, but we are not there yet. We just could be approaching towards this or trading in these final cycles. Since we mentioned Aussie, here, firstly, let me show you the big picture. Okay, what is really interesting about this one is that if we look back, we know that there was recession here in 2000, right? And back then, after a bottom, we have seen a very nice free wave recovery here, okay? Then again, it was a recession here in 2008, financial crisis, and then again, we bottomed and another free wave recovery. And now I think that 2020 was a very similar play. We had, as you know, because of coronavirus, we have this breakdown, and now after QE, we are again turning bullish. So I think that we could see a very similar patterns here away from these 2020 lows. And if you look on the wave principle here, we have, yes, potentially 5 waves down, which is very aggressive, very structured, but still nothing moves in straight line. So you would be probably expecting a free wave rise. And this free wave rise could take us much, much higher here in upcoming months, upcoming maybe even years. Of course, there will be corrections like we have seen here in the middle of those bullish cycles, but I think that this could be a very similar period when it comes to the bullish case. So just be aware that there could be more upside in the upcoming days or weeks. Maybe just keep an eye on this horizontal level here, okay? Here at former wave 4, maybe this could provide some resistance, but when looking at the daily, it could be just a temporary pause here in upcoming days, weeks for a wave 3, then new setback and more upside. So it just very clear recovery that I believe will resume after pullbacks. Also, what is very important when you're looking at Aussie, Hang Seng Index, we are here probably in a wave 4 pullback, so new rise, new reversal higher here would make Aussie probably stronger. You have copper here, let me update this one. I was looking for higher prices, and now this current wave is now becoming even more extended, meaning even more powerful trends that I think will resume after setback. No one knows when the setbacks will occur, but just keep in mind that I don't want to hunt any tops here. Just think that whenever we get a new pause, could be a new opportunity.
Hey, Greg, can I just mention one thing? You know,
Yeah.
I don't know if you saw my tweet earlier, and if you're following the DSI, I can't remember if I forward that over to you every day. But the daily sentiment index for copper registered 93 for 4 days in a row. And first of all, when you get something above 90 or below 10, it just doesn't stay that long. But to get it 4 days in a row at that sustained level is really extreme. So I would think that we're probably, whether it's today or tomorrow, we're probably near a near-term top in copper. So what you're drawing there, it looks probably correct. Like we're going to be pulling back soon towards.
Yeah, let's also not forget that we are now at the end of the month. February is a short month, so actually tomorrow, Friday, is the last trading day of this month. So definitely there can be some position adjustments, and
Great point.
Clearly that could be maybe another reason why to slow down, especially if some would try to book profits here after these massive moves. That would make sense, right? To see
Hey, Grega, I have a request, and you know, it doesn't line up with a bearish dollar count, but if you look at the USD CAD daily, it looks like a wedge or an ending diagonal on the daily chart in Canada the last several weeks, but you don't have it that way. Okay.
No.
See,
I was looking for this to be triangle here, and we're tracking for members here, this round triangle, and was looking down for the last few days after the prices managed to break below wave D. So yes, I'm actually looking for a triangle here. And the reason, but still even triangle suggests that we are moving into a fifth wave, because triangle occurs in a wave 4, right?
Yeah.
So even this means that we could be in final stages of this higher degree downtrend. You can be in a fifth wave, but this approach allows me to have wave 5 targets more extended and much more lower compared to maybe to wedge pattern, but could be a very similar signal or warning, I should say, for the upcoming weeks. There can be a pullbacks, but we never know how far this fifth wave will actually go. So for now, I just love to stick with this trend because I know that it's very dangerous.
You see what I'm looking at, if you connect the lows, that there's kind of a wedge at the bottom, starting from where you have 3 and 5, and then
You mean like that, right?
yeah, something like that. Yeah.
Yeah, I mean, very valid point. And even if we go see a bounce here, okay, even your approach with the wedge pattern and my approach with the triangle, and now we are a fifth wave, suggests the same thing actually. I would not be changing the wave count, it would just different approach, suggesting that we are finishing this cycle here. But what is probably the most important thing is obviously crude oil is still very strong, right?
Yeah.
Maybe CAT, it's very interesting to me that CAT was, the dollar CAT was, took so long actually to form this breakout after crude oil, which is in a massive run higher, and I see much more upside there in crude oil. So I just think that this dollar CAT could stay bearish here. Not to mention the dollar index is still away from that levels, from that lows. So
Thank you.
dollar CAT will just extend. But if we get a bounce here away from that your trend line, let's say in 5 waves back to 127.50, I would maybe even look for some counter trend opportunities here if I have not nice evidence that we have bottomed. So
Okay. Thank you.
It's a very valid view to be prepared if something changes here.
Okay.
Also, let's take a look on dollar against Chinese yuan. This is what I wanted to mention earlier here. Okay, so imagine where Aussie is trading now and where copper can be headed after a pullback, where Hang Seng Index can be headed after pullback, and look where dollar Chinese yuan is still far away from these 2014 levels that I think we will see to retest it, because this rise was in 3 waves. This was a very sharp drop. So yes, we could rally here away from this trend line resistance, or maybe we see a breakout and then pull back towards trend line and then more weakness. But the key here is that the trend is very clear and shows you the overall direction, not only for Aussie, maybe for stocks as well, and for global market situation. So I think that this is very important market to track actually, the dollar Chinese yuan.
Quick look at gold or silver.
Yeah, I mean, gold, the reason why gold is not higher, it's definitely our yields, obviously. So if someone is looking at dollar and at gold at the same time, is probably worried at the moment. But in such a situation, we really have to avoid those, those intraday noise, right? And just be aware of a higher degree trend. So we have to just simply make a step back and just review the higher degree charts. When looking at the weekly chart here, I mean, clearly we are in uptrend. Okay, maybe some would say that here is a top in place. Well, I would agree with that if we would see a 5-wave drop away from that highs. But looking at the daily chart here, we have an overlapping drop, ABC x ABC. So I think that we are going to see maybe another retest of the lows, maybe even the lower side of this corrective channel, and then a bounce. But the real and most important thing is here that market is trying to get rid of weak hands here, but the higher degree trend is still here, and I think that this market sooner or later will again be very interesting for more upside. Now looking at the since you mentioned.
But under 1670 changes it from the last chart I saw. If we take out 1670, you have, yeah, it was another gold chart there. Was that it? Yeah.
Yes,
Underway 4, if it takes it out.
that's the support. The ideal support
Yeah.
would be that.
Oh, okay.
Because you have the first zigzag compared to the second zigzag.
Got you.
Measurement measured
All right.
from wave X, and there you have this support. So at the lower side of this corrective channel. So I think it's a very, very interesting level. Actually, maybe even more people would probably avoid gold then, because they would say
Yeah.
that over. Well, it could be actually the reason why to go in. And still, looking here on the daily chart, probably that same level would come in right around this trend line. So it
Well,
would,
thank you so much, Grega, for coming into FACE today.
yeah,
Really, and you know, I really appreciate your work, respect it. I check it all the time, and I think people should subscribe to have that access as well. So thank you very much. I have an interview coming up now, but it was great to hear from the Wizard of Waves, everyone, wasn't it? So everyone, thank Grega for showing
you,
up here
Grega.
today.
Thank you, guys.
All right.
Have a
Good
good day.
hunting, buddy.
Thanks,
Everyone's
Grega.
thanking you.
Bye-bye.
All right. All right. See ya. So Olivier, we're going to get you set up now. I'm really looking forward to meeting you. And welcome to FACE, Olivier.
Hello,
Waiting for you to unmute. There you go.
can you hear me?
Got you, Olivier.
Excellent.
Great to meet you.
Great to meet you. I just listened a bit to the past interview. Yeah, I'm.
Yeah.
I guess we're already recording, and this is the interview.
Yeah, this is it. We're live now. If you have some charts or anything to share, Olivier, you just go to share screen.
Where
There's
is
a
that?
green box drop down menu.
Okay.
See that little green box? You click it, it'll show share. There you go. All right.
Okay.
Okay.
Are we going to do this for around 30 minutes, something like that?
We'll just play it by ear. Yeah, 20, 30 minutes. And just before we get into the charts, you know, I know I read a little bit about you. I went to your website /blog, and God, you know, what great resources you have on the right-hand side of articles written by some of the legends of trading. And, you know, it's really a great resource. I want you to show that near the end of the interview. Can you tell us how you got involved in the first place and what you may have been doing beforehand, and your entree into the trading business, how that happened?
I started trading in January '99. Yeah, let's call it almost the end of the dot-com bubble, and
Okay.
got hooked. And I was on my way to becoming a teacher, but then I decided to become a trader, basically, and I stopped teaching.
Both require patience, don't they?
Pardon?
Both require patience.
Yes, but I would say the teaching part is still part of my personality, but I prefer teaching, you know, with my premium stuff. I do videos, and let me put it that way. It's, you know, when you teach children, they often don't want to listen to what you have to say. And when you teach adults, it's more rewarding. At least that's the way I see it. So.
Okay. All right.
I
mean, what good? I mean, if you have this knowledge or even a material possession, what good is anything until it's shared with another?
That is also a big part. You know, it's, you know, obviously when I've been trading this is my 23rd year now, I believe. I've benefited a lot from other traders, and it's, I mean, it sounds so trite, cliche, giving back, etc. But it's, it's a mixture of many things. You give back, you're still part of the trading community.
Yes.
It's also, I view it as, somehow keeping a journal. I'm accountable. It's you talk about stuff, and then you have to, constantly be open-minded and willing to adapt to new situations. And yeah, when
Oh, yeah.
when
People,
when the trend
people
changes,
remember,
you have to change your approach.
yeah.
This kind of
Have
thing.
you ever noticed that, there are a lot of people out there in FinTwit that have a better memory for your mistakes than what you
Well,
did right?
Yeah, that's social media, the worst
Yeah.
part of social media.
Yeah. Jackson Brown has a line in one of his songs is, "Don't remind me of my failures. I have not forgotten them."
Yeah, exactly. I mean,
Yeah.
it's I've had a very good year in 2020. This year, nothing really much is moving my way. So a very difficult year, but I basically made a killing with Fastly. Actually, I can pull up the chart. What's going on?
It's all right. Take your time.
Actually, this is a software I don't use usually. My main computer, I kind of do Zoom with it, so
Okay.
I'm doing this
Oh,
with
okay.
my laptop. So I just installed the software yesterday. So, but it's okay to show you a few things. So, do you want
The
me to go
gaps a
through the?
lot. The gaps a lot. Are those mainly earnings, all those gaps?
Well, that's exactly the point. It gaps a lot when you look at the chart starting from here, basically, right?
Yeah.
So basically, this is where the stock starts to gap a lot. My point is, this was the initial gap. I'm just going through the trade real quick because I'm a stock trader exclusively. I don't trade commodities and stuff like that. Well, silver and gold, but not as in the commodity, but
And
also
the miners.
as in stocks, mining stocks.
Yes. Yes.
So what I like to say is, this is a breakaway gap, actually. Yeah, that removes all the lines, but anyway, so I've increased
Yeah, one thing FX
Yeah.
traders don't have a lot of experience with, because we trade 24/6, are different type of gaps. Now, you mentioned breakaway gaps. There are runaway gaps, there are common area gaps. You can leave islands. You really go ahead.
Exactly. I mean, I would, the best description I would like to come up with is, depending on how you trade, and I do like to, do like to focus on, big basing patterns, then a big gap accompanied by a big volume. So this is a breakaway gap. So think in terms of, this is, some kind of, channel. Within that channel, as you just described, Forex traders, they're going to be like applying mean reversion kind of strategies. And this is all nice, but then when the let's call it the true breakout comes because of my material change, maybe a new product, this is CanSlim type of stuff, the N in CanSlim, like new, this could be new product, new or the company is now becoming profitable, or new CEO. These kind of changes, material changes, they are often the start of a new trend. And this is something that is, I would call it, growth, momentum, gauging story, stock potential kind of trading. This is what I'm trading. And to make a long story short, this is the phase where you can make a killing. And this is exactly the part of the trend where novice amateur traders are like, I'm going to wait for a pullback. I want to bargain, etc. And then when the big money and the easy money has been made, then you get those situations where the stock gaps down, where you have extreme volatility, and this is the reason why I pulled up the chart here. This is when, after making a killing, I got caught in that gap here. I bought below 100 and I gave back all my profits for this single trade here.
That's a huge gap. Was that an earnings report disappointment?
Yes, I believe so. I actually don't even remember. I think earnings, and this is what I really like.
I wouldn't want to remember either.
This is in terms of trading, this is a momentum killer, and this is where as opposed to this uptrend, we now have a potential situation where we have this kind of trend, and this is where those who fall in love with this stock get suckered in again. But
it just filled the gap up there at 22.75. So that's what a lot of FX traders believe. Every gap will be filled, but that's not always true.
But I think it's complete nonsense, because it depends on what kind of gap it is.
Right.
Let's just remove all those lines. Let me just draw it here. Assuming you have some kind of trading range, and then the stock breaks out of that trading range, maybe retests, and then some huge trend develops. So this can be a smooth move out of the trading range here, or it can gap higher and then never look back, and then you have a gap that's never going to get filled. I'm sure stocks like Apple, etc., when they announced the iPod or iPhone, I don't remember exactly, I think actually it was in, I don't want to review Apple, but let's just pull up the monthly chart so we get, I think 2000 and of course, with the monthly chart, you don't see the gaps. Anyway, assuming that maybe, here the stock gaps up, or here, these are the kind of gaps that never get filled, And so I would be very cautious when it comes to saying all gaps get filled. Yeah. And this is part of the mean reversion type of trading mentality. If you're a growth momentum stock, I don't think that way. So for me, this is a completely different. And when I say gaps don't get filled, this is something you can trade. You can see my mouse, right? And then trend, maybe imagine a stock that does not gap down here on earnings, but gaps up and continues its, let's call it, meteoric rise. Of course, 10 years later or 3 years later, this gap can get filled here. Right. But you cannot.
That happened with the euro. Yeah, it took years for it to come back and fill it. Yeah.
Yeah,
same type of formation.
You cannot make money with that, because the stock is going, assuming you go short here, the stock is going against you for too long, and if it, let's say, more than doubles or triples, you have to cover at some point in time. So
is that RS rating important to you, and is that relative strength ranking in its sector?
No, and actually I don't use this software, as I said at the beginning. It's just for this interview that I downloaded it, and I'm using it.
What do you use?
Price on,
What do you use?
This is some old German software. It's really not, the software is not really important. What is important, in my opinion, is what you focus on. And I'm a pure, I display price and volume on my charts. I do display some moving averages, typically the really simple stuff, moving average 20, 50, 100, 200, and that's it, and so for me, it's I'm a, the tape tells it all. It's I want to see price, and this is, let me put it that way. This type of gap is a situation where a stock or a situation develops a life of its own, and then, do I need to know if it has a relative strength? I think the relative strength here is compared to the S&P 500 or to, I don't even know exactly. But
Okay.
So no matter what it compares it to, the relative strength, you should be able to see it in the chart. So it doesn't matter if it's 97 or 99 or 90 or whatever, and if it's a new situation, I'm sure that at this point in time, it probably does not have the best ratings. It's more like here probably where it starts to really show up on the scans. And I'm glad you asked. This is where I find the stocks, by scanning for above average volume, and then you get those volume spikes. And if you combine that with a chart that has put in a long base and you have a fresh new breakout, think breakaway pattern, breakaway gap to the upside, then this is where all the mean reversion, all the mean reversion people are trapped, because they are waiting for a pullback that never comes. And with super strong stocks, my recommendation is always do not wait for, cheap, easy entries, because that often equates to waiting for a pullback that never comes. I'm talking.
And then if you get them, it's probably, if the market accommodates people, then you should be
exactly.
Be cynical about it.
I couldn't have said it better myself. And this is exactly the point I wanted to make. This is where nobody wants to buy the stock, and this is where everybody wants to buy the stock. And guess who is making money? And this is the easy, this here, right? This is the easy entry. A bargain. Let's, I always wanted to own the stock. Now I can get it for cheap. And guess what? It's poisoned gift, so to speak. And I'm not even sure if that term exists in English. Anyway, and this is where it's extremely difficult to buy the stock, because it's a new all-time high here. Nobody knows if it's gonna move up 10% and then reverse and fall back into the pattern, that is into the basing pattern, or if it develops a life of its own and then goes on to, in this case, double or triple.
Actually, so what is the most important thought in your head? Because, making a great forecast is, great. Making a great trade and an entry is another thing. But you've hit on what is the most difficult thing for most people to do. I'll include myself, and that's why I take partial profits, so I still have something on. What is your self-talk to make a great hold?
Gun to head, this is what I always say. My goal is to be extremely impatient with losing trades and to be extremely patient with winning trades. And the way to achieve that is, this kind of self-talk I do is, I want to give a stock every opportunity, every big winner. I want to give the opportunity to develop into a monster winner. Of course, this is not going to work every time, but once or those times it works, or when it works, you can, instead of having a double, you can have a triple or even a fourfold increase, which is rather rare, let's put it that way. Although FinTwit might suggest other things. So
extremely patient, extremely impatient with losing trades, and extremely patient with winners.
Exactly. If you do that, I would say you're going to be better than 90% of the traders out there.
Yeah, because that is a tough discipline to be able to do it. I mean, sometimes I say, like, moves to, from 3,000 to 50,000 in Bitcoin, that for the most part, I could honestly say I wouldn't have ridden it, because, I got in early, got out early. So
that's exactly that. That's also one of the, you might have people here who bought here and sold here, and they're like, oh, fantastic, I made 10%, but maybe even 20%, but that's not the big money. The big money is when when there's a revaluation process starting, or put another way here, when a new all-time high gets printed. Just to be perfectly clear, I didn't benefit from Bitcoin as much as I would like to, but think back when it crossed 20,000, and this is a completely different setup, because that was a new all-time high. Actually, was it an all-time high?
18,000 was a
Yeah,
prior.
or maybe I'm mixing up between priced in euro or dollars,
Oh,
but somewhere around 20,000. And this was a new all-time high. And this is, comparable to this situation. This is a situation where nobody is in the red, everybody's in the green, and there's no reason for those in the trade to sell because of losses they might have accumulated. The only reason to sell is the one you described, that is you want to take partial profits, and then but this is where think in terms of sample size. If you do this often enough, if you force yourself to give a stock the benefit of the doubt, and then to say, I'll try to let a big winner develop into a potential monster winner. And then if you do this over and over and over, you might latch on to some really to a monster trade, and then
Okay, and what about risk management, Olivier?
With those potential monster trades, or in general, or?
And I mean, anytime you go into a trade, where you're going to bail. If a level is taken out, when you go into a trade, you may be looking for a monster, but you don't want to be eaten up by a monster either. So
exactly. Well, but that what you're referring to is volatility. You wanna enter in a situation where there's not that much volatility. So if you don't buy here, and if you don't want to chase, wait for the first consolidation pattern, something like that, and then this is your buy point here, where the stock will prove you, or if you're wrong, the stock will prove you that you're wrong very quickly, and you can exit for a rather small controlled loss. So this is the perfect entry for this one. Either depends on how you define aggressive, but either you buy immediately after the gap, or you wait for the first consolidation, in this case continuation pattern, and then you buy the breakout out of that pattern.
Okay.
With regards
what
to
would you do right now with this stock?
Nothing. This is game over, I would say.
Okay.
I mean, this is
next. The most important word for an investor and a trader, in my view, is next.
Yeah, or the ability to say no to second best setups. This is a new trading range. You could call it pattern morphing. From a strong uptrend, it morphs into a sideways trading. Maybe this is some kind of huge, head and shoulders pattern, bearish head and shoulder. Who knows? But this is, gun to head. I would say, if it's able to take out this high, I might consider going long again, or very simple, wait until it prints a new all-time high, and then everybody who buys, if the stock starts to move higher from here, it's not going to happen tomorrow, obviously. Then you have a situation where nobody wants to sell because they're in the green, so there's no selling pressure here. Here the situation here is, if the stock starts to move higher here like that, with every dollar the stock moves higher, it will encounter, if you go to the left, that is into its trading history, there's going to be people who have a break-even trade and who are going to say, great, I can exit for break-even, and this is creating selling pressure. This is called overhead resistance, and then this is the the performance killer number one, overhead resistance. And this stock has plenty of overhead resistance, plenty of disappointed traders, and also traders who are in the red, and who at the first opportunity they're given to have a break-even trade, they're going to sell.
Okay, is that another reason it's game over because of all the supply above it now?
Well, I like to say game over, but you know, I'm very
You
open.
may be back in the game. Maybe it's just halftime.
Exactly. A game over is just a you know, this is just
Yeah.
right now, you know. Again, I'm very open-minded. I can change my mind very, very quickly in a heartbeat.
Oh,
So
you must like W.D. Gann's saying. Do you know it?
I don't know his saying. I'm familiar with the name, but
How about this? You could write it down and share it with your people. If you don't learn how to change your mind, you won't have any change left. W.D. Gann.
that's a good one. I'm gonna type in change mind.
Yeah. If you don't learn how to change your mind, you won't have any change left. So at this point, Olivier, you want to show your website and the best way for people to follow you and possibly get
Actually,
involved with you?
Uh,
Tischendorf.com is where
Exactly.
you can find
So
Olivier.
the only thing you have to pay attention to is to type in my name correctly. You can see that I'm on Twitter here. You can follow me on Twitter, and then the orange stuff here is actually, that's an interview I recently did. So if people want to know more about me, they can watch that interview as well. And if you can click through to my premium website and then you know, join if you're interested, and then you know, clicking on subscribe gives you a description of what I do. So this is the kind of trader I am. As you can see here, trend following, momentum trading, identifying proper pattern pressure, which is, you know, this is an educational service I'm offering. This is not an alert service. So it's for people who want to learn about trading psychology, you know, how I look at charts, you know, and I also like to say technical analysis to me personally is, you know, it's a pain analysis. You know, I want to analyze who wants to sell, who wants to hold on to their position, and who is sitting on the sidelines and might be induced to buy into a stock. And the more you understand how price motivates people to act in a certain way, the better you're going to be as a trader.
Okay, well, let's wrap it with that. And I really want to thank you for coming here and sharing and giving up some of your most valuable currency, which is your time, for us today, Olivier.
You're
And
most welcome.
I'm glad I reached out to you. Nice interview. And like I said in the tweet, anyone I interview becomes my trading warrior brother. So that's what you are now. Like it or not, you're stuck with it.
That sounds good. Anytime you want to do another interview, let me know. Just because I'm not quite sure, are you going to record this on and
It is.
It
is recorded.
I mean, are you going to make it available on YouTube?
Yes. Yeah,
okay,
yeah.
so
It'll be on YouTube. We'll tweet it out. It'll be out there for you and everyone to see.
I'll retweet that one to my followers so that they can watch it when they have.
Well, thank you very much for edifying our attendees today and all viewers that watch the video, Olivier. Appreciate it.
It was my pleasure. I thank you.
Okay. All right. Well, you know, it was a great discussion on gaps. You know, don't hear it a lot, so it's great to have an equity trader talk about things that you know, a lot of FX guys aren't experienced with. I love them. I used to love when markets would close and reopen. So that was my biggest adjustment to FX. So again, thank you very much, Olivier, and good hunting. And may monsters keep finding you, and you know, monster trades.
Actually, that's a very big point, important point you just bring up. You don't want to force trades. You want monsters to find you. That's a very good, also a very good summary of what defines a good trader. You know, they scan the markets, they do their scans, and when they see something, they seize the opportunity, and they don't force trades. They don't force their opinion on the markets, you know.
Right. So many monsters ahead in your future, brother. Okay.
Yeah. Thank you very much.
All right, everyone. Olivier Tischendorf, could find him on Twitter at Tischendorf, and tischendorf.com is his website. And we'll see everyone to wrap up the week tomorrow. You could join Blake and the team in 15 minutes for the bias chart. And remember, don't just count your pips or equities or money. You know, the most important thing to count every day is your blessings. Tough to be depressed and grateful at the same time. They can't happen simultaneously. So we'll see everyone tomorrow. Adios. You're welcome, everyone. Happy Purim, Amira. All right. Adios. Shalom.
Bye-bye.
Bye.
Do I need to
No,
click on
I'll just
something?
end it here, Olivier. Nice job today, buddy.
Excellent. I thought we would talk. You're not recording anymore.
Well, I have to end the meeting, so we'll talk after this via
Okay.
Twitter. All right.
Okay.
See you, everyone.
See.
Bye-bye.